Good afternoon, LifeWealth family. This is Hilgardt Lambrecht here again, and this is my quarterly, or my weekly market update with you. I'm updating a lot of things that happens fast, and I know not all of us have the time to watch the news. But first, on the war in Ukraine, it looks like Ukraine is providing some strong resistance in the northern parts, warring against Russia, and that Russia and Ukraine do not see this to be a short battle. The battle continues on beyond that. It goes into Moscow now continuing to threaten nuclear confrontation, energy crisis, and invasion of new territories belonging to Ukraine. So they're not letting up. The victory for Russia at this point in time is building a land bridge between Crimea and on the eastern border called the Donbas region. And doesn't look like this war is going to go fast or by fast, as I've been saying pretty much every week. Sanctions continues to go on to Russia. It's interesting to look at the earnings reports of companies coming out like Apple, who has large amounts of businesses in business interest in Russia that has to shut down their business interest. And I know that those were one of the stocks that missed their earnings report. But here at home, we expect a interest rate increase by the Fed in this week's meeting of about 0.5% interest rates increasing. If you are a borrower, this is not good news, especially on new mortgages. If you are an investor, this is really good news for interest rates inside of money market accounts, as well as we looked at things like fixed annuities. Interest rates also positively affects the indexing that happens inside of equity index annuities. And we've seen a lot of increases to participation rates on the way that equity index annuities works for our clients. So this is a good, accepted, welcome positive for investors when interest rates goes up. If I look back at this last 2 weeks, it's been very difficult. This is earnings season, time where different companies comes up with their earning reports. Also, the GDP, that stands for gross domestic product. It's the production of the United States economy. And the first quarter actually came out with a negative number, a loss. And mostly of that has to do with the fact that we were importing more goods than we were exporting. Obviously, the whole economies of Russia and Ukraine being down and not importing. But the underlying economy in the United States is still strong. If we look at what's happening with the amount of jobs that is available, don't know if you know, about 11 million jobs are available. There's about 6 million people unemployed. So really strong job availability. The average wages is up. Average amount of cash that an individual have in the house is up in a big way. So the underlying economy in the United States is still strong. You hear the word recession thrown around. The definition of a recession is that there is two negative GDP quarters, two negative GDP quarters back to back. And if we enter into a recession, nobody's expecting this recession to be a long term. In fact, the expectation of us going into recession is very mild. Some further good news is that the market is pricing in this 50% rate hike already from interest rates. And markets are just trading negative at this point in time, mostly because they don't know how to expect or see the expectation of further interest rate increases. The areas in the market that specifically got affected the most are the NASDAQ. The NASDAQ consists of about 50% of its companies is technology companies stock and also large cap growth oriented stock. Folks, these were the area that in the last 10 years was booming the most. They have grown exceptional. And this was the area that our economy was mostly fueled by. These areas are hit the hardest. We have certain investments in these types of arenas. Look for another email or emails or messages that I'm sending to you relative to this. But I want you to understand, the stock market is down. For some people, this represents a heck of a buying opportunity. The way to be able to look at this as a buying opportunity is to look a little bit more further into the future, as far as maybe 6 months, 9 months, or even 2 years. Most economists are not anticipating a recession, and most money managers are feeling that the quarter 3 and quarter 4 of this year, markets will actually turn more positive, and as most of the interest rates are communicated and already priced into the markets. We don't see as an economy that is weak. We see actually an economy that's strong, with cash on hand and jobs and higher income for average people. So just so you understand, Nasdaq is down the most, about 20%, and it's because it has most of the technology stock. S&P has about 28% of the S&P consists of technology companies, and the Dow has the least amount. So the Dow is about -9 year to date. So I think in the short run, it's going to get a little bit more squirmy. It's trading very much up and down on a day by day basis, but expect that level of volatility. Expect that. The best things you can do, and to put this in the right context, is if you're not close to retirement or in retirement, it is a good buying opportunity. It is a good, strong buying opportunity. It's on sale. We had a very strong year last year. The markets are down about as much as the markets went up last year. S&P is down about 12, but we were up about 20, 22 last year. It's a really good opportunity to be able to, if you feel like I missed it last year, it's a good opportunity to catch up and continue to invest. If you are getting concerned with volatility, looking at your statements, it's definitely time for you to reach out to us to have a conversation. We do have stabilizers we can offer inside of portfolios. We have portfolios that are performing positive right now that we use as stabilizers. It's our unique possibilities portfolio. And then also we've developed a high yield portfolio to give more predictable returns for folks who are looking for stabilizers without necessarily being out of the market. This is the perfect time where having a plan really pays for you in a big way. I'm starting to see more and more folks coming to visit with us from referrals from existing clients or folks who came to workshops in the past who are now ready to have a discussion. If you have a plan, fantastic, because we are anticipating volatility inside your plan by the way we are investing the money. If you don't have a plan, you're probably listening to this because a friend forwarded this video onto you. Reach out to us. You can reach us here at 407-299-4129. Let's have a discussion about how to create a solid plan and a solid investment strategy that's backed by your plan, not just backed by feel or whatever's going on. And let's get strategic and tactical with what's going on with your money to be able to see more dreams come true. I thank you for your time today. We'll look forward to being with you next week. Have a great rest of the day.